In today's video, I am going to be comparing VOO, the ETF, up against SPY, the ETF. They look very similar, however, there are some slight differences, and I'm going to be comparing it right now. So let's get down to it. So first off, right off the bat, SPY trades at $442.50 a share at the time of making this video, and VOO trades at $406.76. So technically, when it comes to dollar value, VOO is a bit cheaper, but not an actual valuation. There is a difference there. However, technically speaking, if you're buying enough of these shares, you may be able to get one extra share of Vanguard. If, for example, you were buying, let's say, over 10 or 11 shares, you could actually fit in and squeeze in an extra share because there is a $40 difference. So if you had a set amount of money that you would be investing, you may be able to get that one extra share with Vanguard, depending on if it worked out to be just basically enough money to buy that extra share. Let's say, for example, you had $415 left over to spend, you would actually be able to still spend that and get that extra Vanguard share versus SPY that you wouldn't be able to. Next, I want to really look at the volume, and that's how many shares are being traded every single day. And when it comes down to 4.5 million shares on average, that is going to be very easy to get in and out of because I doubt anybody is going to be buying 1 million or 2 million shares of this in a single day, in a single setting. And when it comes to SPY, it is a little bit more of a popular ETF, and it does have an average trading volume of 72 million shares traded per day. However, if you are doing options trading on these ETFs, SPY would be the easier or better one to do it on, as the volume is much higher. Next, I really want to look at the yield. Now, of course, when you're investing into an index fund, you're generally not looking at the yield, but it's good to still reinvest it. However, if we compare 1.3% on SPY versus VOO, we're seeing that there is a little bit of an increase in dividend when it comes to the Vanguard VOO. It's 1.34%. So it's not a massive change. For example, if you were to invest $100 into these ETFs, which let's say you could do fractional shares as an example, then at the end of the day, you would be essentially getting 4 cents more per dollar essentially that you're investing, or 4 cents more on every $100 essentially that you would be investing. So it's not a huge difference. If you're investing $1,000, then it would be 40 cents. And if you were to invest $10,000, you would be at $4 more. So it's not a massive difference. Now, when it comes to the expense ratio, that is something that I personally really like to pay attention to, especially when it comes to index funds. You want essentially the lowest MER possible when it comes to an index fund, because most index funds are generally pretty similar to each other. So, for example, SPY is 0.09% MER. Meanwhile, VOO is 0.03. So that 0.06% doesn't exactly add up to a lot. However, for $100, every $100 that you invest, you're essentially, or you have invested in these ETFs, you're essentially saving 6 cents every single year. Now, that doesn't seem like a lot, but if you have, let's say, $10,000 in this ETF or these ETFs, you would be essentially saving $6 every single year. And if you had $100,000 invested in these ETFs, you would be essentially saving $60 a year. So of course, when you start getting to larger amounts, of course, MER really starts to become a bigger factor. But if you're only investing a couple $100, let's say you're on a platform that allows you to do fractional shares, it doesn't necessarily mean all that much. Now, when we start looking at the charts, if we go to a 5-year chart, we will see that about 5 years ago, there was a little bit of a dip, and we'll measure from that dip because it's easier. We'll measure from that dip, and the low on that was 208, and we're currently sitting at 442. So basically what you would be looking to do is 442 divided by 208. I'm going to be rounding off to dollars because there's no sense in doing cents. You're at 2.125. Meanwhile, if we look at VOO, we see it's at 191, or the low one was 191 versus now at 406. So if we go 406 divided by 191, you would actually get 2.125. So they actually equal up to be about basically the same. However, these screenshots were essentially taken at the exact same time. And at the pre-market today, VOO was up 0.46%. Meanwhile, SPY was only up 0.44%. Does that mean anything? No. That 1 to 2 seconds difference between the screenshot may have allowed this to actually change. There is no real difference when it comes to these ETFs. So when it comes to the Vanguard ETF, we can scroll down and we can see that these are the top holdings. Now, in theory, the other ETF, SPY, should have the exact same holdings. So what we're going to do is we're going to write down what Apple is at, which is 5.92 as a weighting on the overall ETF. And then we'll go to Tesla, which is 1.44, and we'll say T for Tesla and A for Apple. And then what we'll do is we will switch over to SPY. And for SPY, when we scroll down, we can see that Apple comes in at 5.9 and Tesla comes down to 1.44. Does this make a big difference? Not really. So overall, you are essentially getting two very similar ETFs. The biggest difference is going to be that MER. If you're doing options trading, obviously SPY is going to be the one that you want to do that on because the volume is ridiculous at over 70 million shares being traded every single day. Meanwhile, with VOO, it's a lot cheaper of an MER, which basically means that you can essentially own that longer and actually make technically more money, mainly because the MER is a little bit lower. You're only going to see it when you start trading thousands of dollars into the ETF, so keep that in mind as well. Between these two ETFs, they're both very good. They're index ETFs. You can basically never lose. How I treat index ETFs is any money that I am currently not trading right now, not looking to invest into a singular company, I will hold into index ETFs. That way, I can basically just copy the market until there's something that's on sale that I want to buy. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.